Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. And we thought we'd come to you with a little bit of an update and tell you a little bit what's going on in the market. We've seen a little bit of a pullback after the S&P set an all-time high, which is actually not that uncommon. To put it in context, I start to get phone calls when the S&P has traded down for more than a day in a row. This has been 2 days in a row that the S&P has been off a little bit. And so my phone has started chirping just a little bit. It's really not that uncommon. It didn't happen really at all in the month of April, but we've certainly seen two or 3 day pullbacks throughout most of the year. And to put it all in context, we are still up 10% year to date for the S&P 500, and we're really only about a third of the way through the year, which is a great return by anybody's standards. The large driver of that is on the earnings side. So we are knee deep in earnings season. We've seen about 10 to 15% of the companies in the S&P 500 reports, and they are reporting what can only be described as fantastic numbers. About 80% of the companies that have reported have beat analyst expectations, which is above the normal. Those companies that are beating are reporting an average about 30% revenue and earnings growth, which is simply mind-boggling that the economy is growing that fast. And that's part of the reflation trade that we've talked about previously. It's not entirely unexpected, but it's certainly that anticipation of this sort of reflation of the U.S. economy that drove the market to all-time highs. Seeing it take a little bit of a pause here is not all that concerning to me, particularly when you look at the chatter on the street, where the concern is really just around, how aggressive are companies going to get with their guidance going forward? Are they going to be comfortable with, continuing to post these types of growth numbers throughout the rest of the year? Are they going to guide a little bit more conservatively? My guess is they will guide a little bit more conservatively. And then there's been a little bit of question around the impact of inflation on corporate profits and whether or not that may dent earnings growth in the second half of the year. That's largely a to be determined. But these are once again things that are all symbols of robust growth, symptoms of robust growth, and so it's not something that gives me a whole lot of heartburn or causes me to lose a whole lot of sleep at night. And so with that, as always, if you have any questions, please feel free to reach out to either myself or your advisor. I look forward to talking to you again soon.
Are you enjoying this content? Please subscribe to our YouTube channel or follow us at RFG Advisory on Facebook, LinkedIn, and Twitter. Thanks.